So the stock market has been on absolute fire. This is truly going to be a special week to be day trading stock options as they are approaching their 0-day expiration on Friday. I currently have a couple setups on my radar in terms of the best setup that I'm seeing as of now. I'm going to be walking you through it and sharing it with you in terms of this video. I'm going to be breaking it down for you. It's going to be on ticker symbol DJT for a potential day trading and swing trading opportunity. I spoke about this ticker a couple videos back. For those of you who decided to take action on that opportunity, you should have had a phenomenal day as DJT ended up bottoming recently at $28 a share and then ended up skyrocketing in the after hours trading session to $54 a share. For those of you who ended up buying shares and selling during the extended hours trading session, locking in your profits for that gap fill play that I spoke about, I made it very, very clear that we can see $50 in November and to look for daily chart confirmations. Well, I don't believe it's over. I think we're going to be setting up for another day trading and swing trading opportunity on DJT. First things first, I'm going to be giving you an in-depth price action analysis on the SPY. We are setting up for another lucrative trading opportunity on that. And then towards the end of this video, I'm going to be breaking down the trades that we ended up making today. I had 3 phenomenal wins on call options ranging from 50 to 100% profit returns. I'm going to be explaining to you the unique trading strategies that I use to profit on SPY call options. Let's get right into this video. If you're serious about making money, make sure you're subscribed to this channel. With that being said, in terms of the SPY, this is what I want you to be aware of, right? So we're just hitting through new all-time highs nonstop right now, right? So in terms of the overall setups based off the daily chart, I'm not seeing too much, but in terms of what I am seeing, it's going to be very, very simple heading into tomorrow. If the SPY is gapping up, opening up higher than the previous closing price, 590.104, is likely going to be a bullish trend day. So in terms of this situation, you're going to want to be using the breakout and retest strategy. Look for resistance levels in the pre-market if we are gapping up. Look for resistance levels during normal trading hours if we are gapping up. And if the SPY breaks above those levels, drops back down to retest, look for the 30-minute candlestick bullish patterns to play for a continued gap and go. Based off of what I'm seeing, if we do end up gapping up, it's likely going to be a bullish trend day for a gap and go. So look to use the breakout and retest strategy along with the 10-day, 30-minute candlestick trading strategies that I've been teaching you. Now, if the SPY is opening up flat, or if we're having a small gap down, or if we're just reacting bearish in general at this level, this is the make or break level. So what I want you to understand heading into tomorrow, right? So if we're not gapping up, if we're opening up flat, or if we're having a small gap down, this is the make or break level that's really going to determine if the bears can take control heading into tomorrow and if you should be buying put options. So in terms of that level, it's going to be the following. The previous closing price is going to be extremely important heading into tomorrow. So if we're opening up flat or if we're gapping down, you can think of that as more of like the upper level. But in terms of the key support and the key breakdown level, meaning if this cracks, we fall through, spike back up, form lower highs, form new resistance, form a roof at this overall level, the SPY is going to flip a little bit bearish and the bears are going to gain control in this situation. Again, this is mainly if we are not gapping up. That's the keyword for this overall play. So the level is going to be the following: 590.30. As you can see, we have a lot of resistance at 590.30. Once the SPY reacted as resistance towards this 590.30, it had a quick flash drop to 585.40, right? So if the SPY is reacting bearish, we're having a breakdown of support, we're cracking below this 590.30, we are not gapping up, we're reacting bearish and it breaks down below that support level, then it spikes back up to retest, reacting as a resistance in the new lower highs. That's going to be your opportunity to play puts for the bears to take full control. If that does not happen, heading into tomorrow, the bulls are going to continue to remain in control, especially at the gap and go situation, and you're going to want to focus on the call strategies. So like I said, man, if you're seeing a crack below 590.30, that means that the bears are maintaining that control. As long as we are maintaining below 591 and we are cracking below 590.30, we crack under 590.30, this level right here, the bears are going to take control. SPY is going to start to sell off. In terms of where it's going to go to, it's going to go towards 587.50. So if you play that overall trade, make sure you're setting profit stops, make sure you're selling into the moves. Next level below that is going to be 585.30. Now, if the SPY does flip bearish and the bears do gain control, it's going to be very simple. we are likely to bounce at the gap breakdown level. So in terms of a gap breakdown level, you can see right here, SPY ended up gapping up, opening up higher than the previous closing price. You take the low of day, 585.39. As you can see, this is a make or break level, right? So in terms of the breakout and retest, the SPY had a gap up, the SPY had a gap and go, the SPY formed support, right? Breaking above the previous all-time highs right here, formed support, and then it was a gap and go. So if it drops back down to 585.40, is likely going to bounce first. It would be a little bit unusual to just crack straight through that level without bouncing first, right? So it will likely bounce first if we drop back down to 585.40. And then if it does go under, that means that the bears are gaining in full control. And then that's when the gap is going to start to fill below. And then the next best level to buy calls would be at the previous resistance to react to support, the gap and go, breakout and retest, the previous closing price gap, close reversal right here at the 576.50 for call options. That is the overall game plan. So I gave you the game plan for calls if we're gapping up, if we're reacting bullish. I gave you the game plan in terms of what needs to happen for the bears to take full control. And then if the bears do take full control, we will likely bounce at 585.40. So you can look for a scalping opportunity. That does not guarantee that we're going to have an overall bullish trend day in reversal from that move, just a quick potential bounce. And then for them to remain in control from there, you would need to see a crack under 585.40, and then it starts to drop back down to the next level, start to fill the gap, and then next best level for calls is going to be 576.50. So based off of what I'm seeing, man, tomorrow should be a fairly simple day, man. If we're gapping up, reacting bullish, it's likely just going to be a gap and go. Very simple bullish day, like today was in a sense. And then in terms of for bears to remain in terms of for bears to actually take control in the situation, it just needs to crack under 590.30, my opinion. And then we start to see a nice drop towards that 587 range, right? So this should be a fairly simple game plan, man. With everything it is that I explained to you, everyone should have a phenomenal green day heading into the market tomorrow. Use this game plan, make your money, use the strategies that I've been teaching you. That's the game plan for the SPY. Now, in terms of the stocks, man, we have so many stocks that are extremely volatile, like Coinbase. There's many tickers, right? So I'm telling you, this is going to be a historic week in history within the overall stock market to be trading zero-day options on stocks, which is going to be on Friday. I'm telling you, man, Friday is going to be absolutely crazy, man. Everybody needs to be prepared for Friday. Everybody needs to be researching and looking for great opportunities heading into tomorrow for the zero-day options on Friday for the stocks, right? The ones that have them. With that being said, the main play that I'm seeing right now, and I'm telling you there's going to be a lot more because many stocks are on fire, but I spoke about this throughout my last couple videos. Go a couple videos back. I encourage you to watch it. I gave great analysis on DJT. We had a couple members inside of Team Roar. They did a phenomenal job trading DJT, and I don't think it's done. I think we're setting up for another spike. So in terms of DJT, basically what I was explaining to you in the last video was, you know, this is extremely oversold. It has a history of filling the gap above. And I pointed out this monthly chart pattern where in terms of the monthly chart on DJT, it's going to try to have a massive spike in November. I was looking at this overall pattern right here, where you can just see right here, you have this green candlestick facing to the upside, and the next green month is extremely bullish breakout. Green candlestick facing to the upside, right? The monthly candle. Next month is a bullish month. Green candlestick facing to the upside, and then the next candle, green bullish overall month, green bullish overall month. So I don't think this is done, man. At the bare minimum, I think we're going back to 50. And then I'm heading into December. This could potentially even break above 50s, right? So in terms of like an easy money share play, DJT remains the easy money share play. Like I said, man, with the analysis I've given you, some of you should have taken action on that. You have to be self-sufficient and take action. I gave you the overall analysis. I made it very, very clear in terms of the monthly chart pattern that this was going to have a strong bullish move into November. And I also pointed out the break and retest. You know, there was resistance right here on DJT at 32, had a massive breakout, then it gapped down, quickly lost all of its gains in just 3 days. And then surely enough, the breakout and retest, this previous resistance right here, reacted as support. And then if you were to include the extended hours trading session, it did end up closing that gap. Now, based off of what I'm seeing, this is another potential situation where it could be a new breakout and retest, right? So the previous resistance on DJT was right around here at this like 3150 level. Once it broke above this like 3150, it had a massive breakout, then it gapped down, quickly lost all of its gains, then it turned this previous resistance right here into new support, right? So what's the new breakout and retest level? The new breakout and retest level is going to be slightly higher at $36 a share, right? So your previous resistance, we're going to call it, is going to be right here at this $32 a share, right around this 3150 level. And then your next level is going to be right here at 34 to 36 overall range. You could say 35 as well, in between this zone. It's like 2-point zones, right? So the point is, you can see the past 2 days, it's already trying to form higher support. It's already trying to reverse at this gap at $34. It's already trying to spike back up to fill that gap that's waiting to fill above, right? So I'm telling you, heading into November, man, we're still due for another bullish move to $50. Even though it already happened, I think it can happen again, right? So I think this is a great opportunity to buy shares, right? In terms of options, it's going to be a little bit more difficult in sense to time that overall perfectly. But tomorrow is setting up for a potential day where we all need to have eyes on this. I did already swing trade shares on this stock. I ended up buying today in the $36 range, and I'm willing to average my cost down on that situation. And more patterns that I wanted to point out, DJT has very similar patterns on the daily chart. If you go back to this, I'm telling you this, in terms of this setup from a technical point of view, this is very similar to the GameStop setup that I pointed out a long time ago, for those of you who saw that GameStop setup. But based off the patterns, man, just take a look at this, man. You have this big move to the upside, big move to the upside, big move to the upside, right? So just focus on these rectangles right here. And then you can see, if you look at this red bearish candlestick right here, and then this red bearish candlestick right here, and then if you look at this red bearish candlestick right here, and this red bearish candlestick right here, and this one is specifically towards the gap, if you just visually look at these patterns right here very, very quickly, especially this one right here, and on this one as well, on kind of how it bottoms out, when it has these big moves and it forms these like red bearish candlesticks, and when it starts to close this gap like right here, it tends to quickly bottom. Like, what really caught my attention was actually this overall pattern right here, man. If DJT gaps up tomorrow, it's going to be calls at open. That's going to be the play. If this does end up gapping up tomorrow, it's going to be calls at play, because you can see right here, man, it had this nice move to the upside, came back down to fill the gap, and it closed the gap. Had this nice move to the upside, came back down to fill the gap and close the gap at 34. And then the next day, it ended up gapping up. And then the day after that, it ended up gapping up. So the ultimate game plan would be, if DJT gaps up tomorrow, to swing trade call options, right? And to go with the ones that have the short-term expiration, right? If you want, you can go with some more that have more time. But in this situation, only if we're gapping up, I would go with the ones that have the most short-term expiration, right? So with that being said, that'd be the overall game plan for that, right? And you can look into, $45 strikes, you can look into $40 strikes. You do in terms of what it is that you want to do. But if we do gap up tomorrow, this can have a very strong move to the upside, and it could potentially last into Friday for a crazy overall move. That'd be the best case situation, man. The volatility is here, right? And we're going to have the short-term expirations expiring. We're going to have the zero dates coming up. So I'm telling you, this is going to be a phenomenal setup to be overall watching. Now, if we're not gapping up, you can see right now it is having a gap down. So if we're not gapping up, just keep this on your radar. Look for some sort of trend reversal daily candlestick. Look for some sort of daily chart candlesticks. Based off of how it's setting up, the bottom is overall nair. So buying shares right now is safe if we are gapping down and reacting bearish, in my opinion. I would give it a shot. And then if you like, you can average your cost down a little bit. I'm telling you, heading into this month, it's due for some sort of overall move. So I'm going to be tracking and following it very, very closely heading into tomorrow. But in order for that big move to really happen tomorrow, it needs to gap up. If not, it can take a couple days. So in terms of that situation, you're just going to want to pay attention to the daily chart, where it's simply just bottoming towards this like 33. You want to see it forming higher support. So it previously bottomed at $29 to $30. You want to see it bottoming now at like $32.50, $33, $33.50. You want to see it forming higher support. If the daily candlesticks are maintaining above that new zone, reacting bullish, or just forming trend reversal candlesticks, within a few days, DJT can take off, right? In terms of this other pattern, you can see right here, if it's forming higher support, see that was the previous resistance right there, forming higher support for a couple of days, and then it starts to take off to close this gap, right? So in terms of that crazy swing trade, where if you're going with the short-term one, that's only if we gap up, right? For the options. If we're not gapping up, is going to take more time if we're not gapping up. It could take a couple days, up to a week. You can try the options. I currently have shares right now. In terms of the options, I like to be extremely meticulous and careful, and I really try my best to time them extremely well. So I didn't jump on the options yet. I'm going to be monitoring it closely. But that's what we're setting up for DJT, man. So just keep that on your overall radar for that overall play if you're interested in that. Now, in terms of the trades, let's get into this, man. So I had some big wins. I had one smaller loss, and then I had a couple of duds. Considering how the price action was, I did extremely well. So in terms of, reasons to be bullish from a technical standpoint, like I said, man, we had a very strong break and retest on the SPY. We had a lot of resistance right here towards all-time highs at 585. We had a strong breakout to 590, came crashing back down, reacting as support, green, red, green, bullish pattern, forming higher support, turning that previous all-time high into support, turning that previous resistance level, strong breakout to breakout and retest, meaning if it maintains above that previous resistance, the SPY will start to spike above that 590 and then try to break above that and then try to continue the bullish trend by dropping back down to turn this new level into support, right? So those are the reasons why you should have been bullish. You should have been looking at all-time highs and you should have been saying the SPY just had a massive break above price, right? We're talking about 585 to 590. That's a massive breakout. So if it drops back down to that previous resistance, is likely going to bounce on the initial reaction, right? And then in terms of confirmations, green, red, green, green, red, green. We had the green, red, green pattern. And it's forming a floor for 2 hours straight. 2 hours straight above previous resistance. If it continues to hold, we're going to have that 5-point move to the upside. And then the SPY will try to break above that. When it tries to break above this, it will try to pull back. And then it will try to turn that into support to continue the overall bullish trend for the bounce first, right? So the breakout and retest strategy was working out phenomenal. All you have to do is look at the all-time daily chart, all-time highs, and the pre-market gave it away. Dude, this is a 5-point move to the upside. 5-point move to the upside, straight back 5 points to the downside. You don't think we're going to bounce first? On the break and retest, you don't think we're going to bounce first? You think they're just going to crash this right away, even if it's bearish? No, it's going to try to bounce first regardless. Hit the fucking calls. So that's why I was hitting calls in the morning. That was a nice trade. It also had to do with the 1-minute chart. Something about this 1-minute pattern spoke to me in terms of like history repeating itself. I specifically remember the SPY looking like this. This is what it looked like in my eyes. So this overall pattern right here, when it hits a key overall support level, I got my key overall support level by looking at the daily chart and looking at the pre-market chart with the breakout and retest, right? But in terms of this pattern right here, it tends to just spike. If you get the right level, it tends to spike right back up towards the previous highs, and then it tends to break out. So in terms of my experience trading the SPY, I saw a pattern on the 1-minute chart, which told me to buy calls as well. And then in terms of the 1-minute chart as well, this is another bullish pattern. It had this like sideways W. It had this W right here. It looks like a W, right? Sideways kind of W. Looks a little fucked up. But that was another reason to be bullish, right? So let me break this down here for you. So the first trade on the day, let's get into this, man. So 589 SPY calls at 78 cents a contract. So I explained to you why I bought the calls. And then it dropped a little bit. I added at 70 cents. I was in very, very close towards the lows. And then I sold at 100 cents. And then they quickly went to 110 cents. So I started off the day with a very good trade on SPY calls. And in terms of the next trade, you could see, so I ended up buying 589 calls. I rebought calls, 589 calls at 80 cents a contract. And this one, I ended up cutting it short. So I ended up getting out at 50 cents. So in that particular situation, I did end up taking the L on that one. And then from there, it was just a couple of duds, nothing too crazy, right? So I got in puts, I switched to puts, I got in at 70 cents, and then I cut for a dud at 72 cents. So just a tiny win, right? And then I took another trade on 589 calls at 59 cents a contract. And then I sold those for a small one at 64 cents. We had some members getting out in the 70 cents. And then after that, that's when I really started to catch on absolute fire. So, sometimes when we take a trade, it's going to be an overall dud where I might just get in and out, or I might take a 30% loss. But based off of all those trades combined, the win literally outweighed all of that in the situation. And then I truly started to catch back on fire here. So, I ended up buying SPY 590 calls at 63 cents a contract. I made it very, very clear that we can see a 1 to 2 hour potential bullish trend, set profit stops along the way, move the profit stop up after the 30-minute candles close green. So I was seeing a pattern where we can potentially get four 30-minute green candles in a row. And then we started trimming some in the mid 90s, and then calls were up 90%, sold the rest at 112 cents a contract. We absolutely fucking crushed it on calls. And then during the power hour trading session, I fucking crushed it again. I bought 591 calls at the exact lows, 38 cents a contract. These went up 100% within minutes. I sold those at 60 cents. And then I made the same exact trade, got back in at 38 cents, and then those quickly went to like 50 cents a contract. So in terms of the overall day, this was fairly good, man. Now, with that being, in terms of like how the price action was, this was fairly good. Now, in terms of like the reasoning behind me buying those overall call options, I explained to you on the first overall trade, right? So I was buying call options at 10 a.m., the breakout and retest. We had resistance right here at 585. If we're having a 5-point breakout and we drop straight back down within the first 30 minutes, everybody knows the first 30-minute candle, overreactions, you know how many traps are going to get created in the first 30 minutes? This is just so fucking obvious, man. This is just so fucking common sense. If we have resistance at 585 and we have a massive 5-point breakout, and then in the first 30 minutes, we drop straight back down to 585, even if SPY flips bearish, is likely going to bounce first. So just get the fuck in on calls for the breakout and retest, for the previous resistance to react to support. I love the overreactions. A massive overreaction to the upside and then a massive overreaction to the downside to turn this previous resistance into support. What you need to understand about supply and demand and price action is this was a resistance level and the SPY quickly broke 5 points above the resistance level. Look at how fucking long it took to go to 585. And then look at how fucking quick it took to go from 589 back to 585. This is the best setup. This is what you need to use in terms of the breakout and retest. The key is this, man. You have a very strong breakout to the upside, and then it loses all of its gains at the speed of fucking light. That's the name of the fucking game, man. Resistance, massive break above resistance. What do we want for the break and retest? We want an overreaction to the upside, meaning we want it to go as high as it can possibly fucking go, and we want it to happen quick. And then what's even better? It's even better if it loses its gains fucking quicker, which it did. It lost all of its fucking gains in 30 minutes. Hit the fucking calls at the previous resistance level to react to support. Even if SPY flipped bearish and we went bearish on the day and it came crashing back down to fill the gap below, it is so high probability, even if you're not using a fucking confirmation, to just play the first key level of reaction, to just buy the fucking calls at 585, man. This is the name of the game. Resistance, massive breakout, lose all of its gains quicker than it took to make the fucking gains. It took fucking hours to make those gains. And then in fucking 30 minutes, we lose all the fucking gains. Dude, buy the fucking calls. It's going to bounce first. Even if the trend decides to flip bearish, the overall trend is going to try to react bullish first. Overreaction to the upside, overreaction to the downside. Everybody knows within the first fucking 30 minutes, the day still hasn't been decided yet. But if it's just common sense, man, the breakout above resistance, drop back down to react as fucking support. That's why we were hitting calls at the opening of this 30-minute fucking candlestick at 10 a.m., man. It was so fucking simple. If you didn't see the market that way today, then it's just, dude, you don't know how to trade. Trading is so simple. I literally just gave you the fucking key. It is so fucking simple. If you use this information, your fucking gains are going to be insane. I'm telling you. Just identify a resistance level, and then what do you want? You want a massive breakout in price. The bigger, the better. And then what makes the play even better? If it loses all of the gains quicker than it made the gains. It loses all the fucking gains in 30 minutes. What makes it even fucking better? The overreaction to the downside at a key time. The first 30-minute fucking flip in the market, everybody knows in the first 30 minutes we can fucking flip. It's just common sense to buy the fucking calls. Dude, fuck the confirmation. You need to understand when levels hit for the first time with overreactions in supply and demand, even if there's a confirmation that SPY is going to try to flip bearish, it's going to bounce fucking first. Buy the fucking dip. Everybody should have been buying that fucking dip, man. If you use this basic concept that I just taught you, you just identify a resistance level and then you want a massive breakout. You just want it to keep on fucking going up. The more it goes up, the fucking better. And then what makes it the best setup is it loses all of its gains quicker than it went up. And then it's likely going to bounce first, right? The initial reaction, it should bounce first. The bounce first is the bulls attempting to turn the previous resistance into support to continue the overall trend for bullish, to then attempt to retest this previous resistance to then try to break above this, drop back down, and then turn that into support, right? But it's no guarantee that the trend is going to maintain bullish. But the most likely outcome in the situation like this is to bounce first, no matter fucking what. So in terms of me, like if I were to buy fucking puts at this level, it would need to fucking drop big and then spike back up, and then there would need to be a solid bearish 30-minute confirmation. There's no way in fucking hell I'm just jumping in puts on the first initial reaction, man. The name of the game with trading is you have to know the level before it's the fucking level, right? Before the level plays out, you have to play the fucking level, man. There's certain levels where you just get in. It's already confirmed in a sense. I just explained to you how it's already fucking confirmed. Get the fuck in. How many times does that happen, man? Where the SPY fucking spikes 5 fucking points, and then in 30 fucking minutes, it drops right back down to bounce first. So I'm trying to make this super fucking simple and clear to you, because I'm telling you, if you just wait for this setup to happen, it's going to happen many, many times throughout this year. If you just trade this one fucking setup, you're going to be going green 8 out of 10 fucking times with massive fucking wins, man. And it's about getting in on that first initial test instead of waiting for some perfect fucking confirmation. Part of trading is to understand, in terms of reversals, the most likely outcomes where you can kind of confirm it in a sense. I call it automation levels. And that was a clear automation level for me to just get in calls, even though this 30-minute candle looked red and fucking bearish. I'm well aware first 30-minute candle can flip easily for the break and retest, right? Even if SPY reacted bearish, it's likely going to bounce fucking first for basically one of those like no-brainer guaranteed setups where it's going to work 80% of the time for just a very solid spike, right? Even if it cracked further, it should have, even if it were to crack and go bearish on the day, it should bounce first. The key is a massive breakout in price, and then you want it to lose all of its fucking gains in a quicker period of time than it took to break out. So this took fucking hours to break out, and then in 30 fucking minutes, it lost all of its fucking gains. That's what you want. Overreaction reversals. I'm telling you, I explained it all to you. Use that strategy, you're going to be banking. Now, in terms of other reasons to be buying call options throughout the day, let's get into this. This is going to be very simple. If we all take a look at the 30-minute chart, right? Because I'm telling you, I have a 30-minute candlestick trading system that is printing money at the speed of fucking light, man. Now, with that being said, in terms of that system that I just showed you right now, that wasn't a 30-minute system. That was a 1-minute system. That's what that truly was, right? But there was reasons to continue to buy. We had the green, red, green. There was green candle in the pre-market, then the red, then the green, then the green, red, green, and it just held for 2 fucking hours above that previous resistance. It's like, dude, you really think we're not going to break the fuck out and go above 590 if there's a fucking floor 2 hours above that previous resistance level? That means that the bulls are turning previous resistance into support, which means the trend is bullish. It held for 2 fucking hours. If it's holding for 2 fucking hours and there's a green, red, green pattern, a green, red, green pattern, that means that the bulls are in control. And if the bulls are in control, what does that mean? That means it's going to retest 590, and then it's going to break above 590. Then it's going to drop back down to try to continue that overall trend bullish, right? So it's just very simple, man. Very, very simple. You should have been buying calls. You should have been saying green, red, green right here. You should have been buying calls at 11 fucking a.m. You should have been buying calls right here, man. In terms of the confirmations, all of the fucking confirmations were there for fucking calls, man. So, if you looked at the 30-minute patterns, this is what I was seeing as well. I saw this like, red trend reversal candlestick right here. And I'm always looking at the 10-day, 30-minute chart. I like capturing short-term trends. It works best if you look at the 10-day, 30-minute chart when you're using short-term overall trends and short-term overall patterns. Red trend reversal candlestick right here, right? And it's above previous resistance. Breakout, higher support, red trend reversal candle, red trend reversal candle, above previous resistance, right? Red trend reversal candlestick, above previous resistance right here, above previous resistance right here. What happens after that? It spiked for an hour straight, right? And then you can see right here, red trend reversal candlestick right here, above the previous resistance level of 574. What did it do? It went up for 2 hours straight. That's why when this candlestick closed like a red trend reversal candlestick and we were forming higher fucking support, I was telling everyone it's likely going to go up for 1 to 2 hours because there was a short-term trend. If you paid fucking attention right here, red trend reversal candlestick, red trend reversal candlestick, It's above the previous big fucking green candle. It's above the previous green fucking candle right here, right? And then it just spikes for 2 fucking hours. Then it just spikes for 2 fucking hours, right? Now, in terms of my reasoning for buying calls, in terms of the power hour trading session, it had to do with this pattern right here. So in terms of the pattern, you have this green trend reversal candlestick like facing to the downside. You have this green trend reversal candlestick facing to the downside, right? So if you just look at this overall pattern, green to the overall downside, and then it starts to spike back up right here, right? So this green trend reversal candlestick facing to the downside, and then the next 30 minutes tends to be super bullish. Next 30 minutes tends to be super bullish, right? And then in terms of this overall red 30-minute candlestick, it was basically saying to buy the dip. I went back throughout many times throughout the 10-day 30-minute chart, and I studied this red 30-minute candlestick right here and this 30-minute candlestick right here, very similar, just slightly different, just not different color. But it was basically saying to buy calls when it drops back down to retest the low for 591 to go back in the money, right? I was seeing multiple situations with that, right? So I just wanted to walk that through. I just wanted to walk that through to you. You could just see right here, right? In terms of what I was just explaining, this is a more clear example. This green candlestick facing to the downside, next 30 minutes is green, buy the dip towards the previous 30-minute lows, right? So that pattern right there. And you could see, okay, this is exactly what I was talking about, right? So this candlestick facing to the upside, right? This candlestick facing to the upside. This candlestick facing to the upside. This candlestick facing to the upside. This candlestick facing to the downside with the wick. Next, last 30-minute right here, it bottoms towards the previous 30-minute low. Last 30-minute right here, it starts to bottom towards the previous 30-minute low. That's my entry for calls. Sell the fucking rip. Sell the fucking rip. It didn't close green like last time, but if you sold the fucking rip, like we fucking did, it was a great fucking play for calls. Now, that explains the main trades. So that's how you should have seen the market if you're using the 10-day 30-minute chart, along with the simple breakout and retest strategy. It was just so fucking obvious to be buying call options at that 10 a.m. open. Like, how much more common sense does it need to be that the bears are just getting absolutely fucking wrecked? So if we're getting a 5-point fucking breakout and then it drops back down in 30 minutes, and everybody knows 10 a.m. could be a great time for reversals, especially if there's a reason to reverse the calls, which there was, the green, red, green pattern, the fucking break and retest. Look, man, you get the fucking point. So for those of you who are serious about trading alongside Wittes and printing out the speed of light, is the first link down below within the description, man. We had many members absolutely crush it today. In terms of the call options, it was a fucking phenomenal day. It's the first link down below within the description. If you want to trade alongside Wittes, you get access to all of our trade alerts. In terms of one of the things that we do differently is we have a real-time zero-date options trading alert system, which means we are known for buying cheap, far, low-risk out-of-money option contracts. We are known for selling them deep in the money for the biggest percentage gains within the market, and we have the highest win rate in the game doing this. Now, with that being said, in terms of some things that we do different with our trading style and system is we're only doing the zero-date options. Like I said, we're always going with the closest expiration, right? That's our focus. And we don't use stop losses. So the contracts are so cheap and so low risk, you can put in your entire position size as your max risk per trade. So you're probably thinking, well, your max risk per trade, it could be a couple % of your account. That's a very small amount of money, right? So how are you able to make good money if your entire position size is your max risk per trade? It's very simple. Big percentage gains. We are known for selling deep in the money. We are known for making massive percentage gains. So since the percentage gains are so massive, even though we're putting in smaller amounts of money, we're still able to make more money and also bigger percentage gains and compound the account than everybody else. And we have multiple trades typically a day doing this with the highest win rate in the game. So it's allowed us to remove the stop loss because our entire position size is our max risk per trade, which is very simple in a sense. If you want, you could just let the contracts expire worthless, go to zero. Certain situations when we're down 30, 40, 50%, or if it just makes sense to cut the play, we will sell the move. It just never makes sense for us to use a stop loss, and that's just due to many reasons. Due to people know where your stop losses are and you will get hunted out. Also due to we're not taking massive position sizes, so there's no reason for it. And me personally, I like to see how stocks react at the overall levels instead of getting automatically stopped out at that overall level. I like to actually trade instead of just getting automatically stopped out, right? So in terms of like my entries, there's certain entries where I just automatically enter and it could be a lack of confirmation. And then I exit with, an automation as well. right? But in terms of like entering a trade and then being down, it just never really made sense for the vast majority of the time to use a stop loss and get stopped out. I prefer to see how it reacts at that specific key level, right? Worst case scenario, we lose what we put into the options, which is the max risk per trade. Now, more things that we do differently is we set profit stops. The reason why we set profit stops is to ensure that we do not go green to red on a trade. If you set a profit stop, it's impossible to go red on a trade if you are already green. You just set the fucking profit stop, you get stopped out for fucking green. We move the profit stop higher to ensure that the bulk of the move is going to be not given back, right? So if we set a profit stop and we continue to move it higher and the market has a big move against us, it's going to try to take the vast majority of our profits. Now, if we move that profit stop up, it's going to ensure that we get profit stopped out at higher prices, ensuring that we still get the bulk of that move, even if the market goes against us, right? And we also like to sell moves, and leave runners for big gains, right? So in terms of the system, we're mainly just trading SPY 0-day option contracts. It's very cutting edge to just focus on one ticker and master one fucking ticker. And we've truly mastered, this simple trading system with the chart, and we truly mastered trading SPY options with the SPY. I'm telling you, if you trade SPY every single fucking day, you'll start to become a pro at trading fucking SPY. And SPY is the best one to trade options on. I'm telling you, master the fucking SPY. It's the best fucking one, man. It wasn't too long ago where we didn't have same day expirations every single fucking day on the SPY. It wasn't too long ago, So the market's changing. The market's on fire. There's opportunities every single fucking day. And this is a real trading style. This is not gambling. Trading can be used as a tool to gamble if that's how you want to use this. But in terms of mastering this trading style, this is a real trading style. You can get good at anything in the market. Anybody can get good at price action. But once you get good at trading the chart and trading price action, you need to decide what asset class do you want to trade? Do you want to trade options? Do you want to trade in the money options? Do you want to trade far the money options? Do you want to trade futures? Do you want to trade prop firm and not with real money? Do you want to trade shares? We've chosen to optimize one of the hardest systems to possibly master and conquer. And it's truly game changing because this is the lowest risk barrier to entry with real money. And it has the biggest upside potential. And we have the highest win rate in the game. Not that we need a high win rate, man. When we're having trades where we make a 1000% return, that means we can lose 9 trades in a row and we'll still be up 100%. So in terms of the system that we have, in every single month, we usually have 3 trades where we make and we sell for 1000% gains. What that means is, that means that you don't need a high win rate with this overall system, right? So we're not over trading. On the days we're on absolute fire and there's many plays, we're looking at like 4 to 5 trades. On the slower days, we're looking at 1 to 3 trades. Every single day, there's opportunities on the 0-day options. This is something we've mastered. This is a real trading style that anybody can get good at. It is possible. But in terms of me, it took over 10 years to figure this out, right? I started with ETFs, then I went to penny stocks, then I went to in the money options, then I figured out out of the money options. That's what I'm doing right now, right? The future can hold something, more different. But that's what I've been doing now. And I'm telling you, this overall system is absolutely phenomenal. It's cheap, it's low risk, it's the biggest percentage gains, it's the best chance to survive within the market, whether you have a small account or a large account. In terms of mastering something and striving to master something, what better than far the money options if you're trading with real money? These contracts have allowed us to remove the stop loss, and they also allowed us to hold options throughout the entire day where they can come back to life and go in the fucking money. The contracts are so fucking cheap, and we have from market open to market fucking close to hold these contracts all fucking day with these massive fucking moves. It's fairly simple if you're holding for them to go in the money. On a bullish trend day, on a bearish fucking trend day, it's fairly simple as long as you're holding, which is another thing we do. We hold for massive wins. Like I said, if we're down 50% on a play, it can come back and go in the money later in the day, and it could be a massive win. And another thing we do in terms of our system is we add to wins. We like to add to wins when we're up a little bit, like 5, 10, 15, 20%, to ensure that it ensures that we win big. We personally sway away from adding to losers. Once in a while, we'll do it if it makes sense. The main thing we do is add to fucking wins. And the reason why is when we win fucking big. So for us, like a small percentage gain is like 5, 10, 20%. For all the fucking degenerates who don't make much money buying the in the money option contracts, they're looking at very small percentage gains. They're sizing in extremely fucking heavy. They're not holding fucking long because their premiums are so fucking expensive. They're going to get decayed at the speed of fucking light. And why the fuck would they hold? It doesn't make sense for them to hold. They're going in the money, right? It makes no fucking sense for the vast majority of the time. So in this situation, we're just able to fucking hold. If the play doesn't work out, we can just hold the fucking play. It can come back to life. It can go in the fucking money. It's so fucking cheap, right? It can go in the money. We can sell in the money for a very nice profit, even if we're down like 50 fucking percent. And we don't have a stop loss. So like I said, man, look, we're doing the complete opposite of what everyone fucking else is doing, man. On a bullish trend day, if you're in calls, even if you're not in a good fucking entry and you just hold the fucking trade, is bound to go in the money. On a bearish trend day, if you're in fucking puts and your entry isn't the best, it's bound to go in the fucking money, man. And we're very good at trend days. But we're not just getting in calls and fucking puts and just holding and fucking hoping for that to happen. We time our trades fucking phenomenally because we actually know what we're fucking doing. But it is a big fucking edge to not have fucking stop loss and to just hold that trade and have it go in the money. That's just a cutting edge overall system that's very low risk in a sense. So if you want to test out a new trading style, it's the first link down below with the description. Our format and our alert system is working for many people. We have many traders making $500 a day, making $1,000 a day, making over 5 figures a week. Many traders within our program are doing it. And the format is not going to be for everyone. Not everyone's going to win. And it is what it is. That's trading. That's life. But I'm telling you, if you want to try out something new, and if you do join this program, you need to understand it's going to take time, man. This is not going to happen overnight, man. Many traders make mistakes. They're not used to holding. They set fucking stop losses. They don't fucking listen. They have degenerate fucking behaviors. We're doing the complete opposite of what everybody else is fucking doing. So this is going to take time to adjust and to truly learn. But for those of you who trade with real money and you're serious about mastering something, I'm telling you, this fucking 0-day options trade alert system is fucking genius to go far out the money option contract. What better to master in terms of an asset class if you're trading with real fucking money? And then we do have traders, when we say calls or puts, they trade futures. They trade fucking ES, they trade fucking futures, and it works well for them, right? They can do that, right? It's just, you got to understand, man, it's very cutting edge to have that. One of the cutting edge parts of the system is, there's no fucking stop loss, cheap fucking position sizes, and we have the whole day to hold for the contracts to go in the money, right? But we usually don't rely on that because we time our trades fairly well. But like I said, when we're down 50% on a trade, 70% of the time we don't cut the loss and we decide to hold it, it tends to come back to life and go in the money, man. And we add to winners to increase the fucking wins. We're up 5, 10, 20%. That's small fucking gains for us. Like I said, we're not doing in the money option contracts. We're not buying something that's expensive, that's higher risk, that goes up smaller amount percentage wise, and that's going to fucking, whenever you buy an in the money option contract and you hold it, theta decay is going to fucking destroy you. I've been in trades on far the money option contracts where I'm so fucking far out and the SPY is dropping against me at certain times of the day, and it just doesn't fucking drop. The contracts don't go against me, even though the price is fucking dropping. Hell, if you're buying in the money option contracts, your premiums are just going to keep on fucking dropping. I've been in many trades where the price is going against me on these far the money option contracts, and they're barely dropping. You understand? This is a cutting edge fucking system, man. I'm telling you, you got to learn the game of options, man. Borrow the money, cheap, low risk, sell deep in the money, biggest percentage gains. If you buy higher premiums, you're going to make small percentage gains. Small percentage gains means you're not making any gains. If you're not making any gains, that means that you need to size in big or make a fuck ton of trades on the day to make gains. If you size in fucking big, you need a fucking tight stop loss. If you size in big, or if you have a tight stop loss, you cannot hold for a big fucking win. Your small wins are not going to fucking add up with a small account. If you make a fuck ton of trades in a single day on in the money option contracts, the only way to do it with a small account is with cash accounts, but it's just not going to work in that situation. You're going to use up the vast majority of the capital. It's going to limit you to your overall trading, and the gains are just going to be too fucking small. Look, man, far out of the money options is the best fucking wave within the market. There is nothing better to master within this overall market if you are trading with real money. So when you guys are ready, I would encourage you to try this out. Start small, start light. If you're starting with a small account, you need to understand that it's not about the dollar gains. You can just trade one fucking contract. It's about learning, gaining experience within the overall market, and compounding your small account percentage-wise. Then once your account is more medium, 5 figures, 6 figures, it's not about continuing to compound it percentage-wise. It's more about trying to do this to not only survive, but to make a good living by focusing on the dollar gains, right? Once your account is bigger, you can take smaller position sizes as well, and you can just focus on the dollar gains instead of trying to compounded percentage, trying to just keep on doubling and doubling and doubling the money. Instead of doing that, once your account's big, you can just focus on the dollar overall gains and make small percentage gains on your account. And then you could really start to not only survive, but thrive within the market by not taking much risk, right? Because if you're trying to compound your account exponentially, you're going to expose yourself to a lot more risk. But if you have a small account, that's just what you have to do in a sense. If you have a medium to large account, it's more in a sense, if you don't want to take it that riskier, not necessarily compounding the account exponentially, but just focusing on the dollar overall gains, right? So I just wanted to clarify to that. And in terms of rich, wealthy people who know how to trade, they prefer to buy far out of the money option contracts instead of in the money option contracts, simply because they pay less, they risk less, they hold longer, they make bigger percentage gains, they don't have to use a stop loss, and they have the entire day for the contracts to go in the money. And like I said, I've been in many trades on far out of the money option contracts where the price is going against me and the contracts just stay the fucking same. They're literally just staying at the same price. But if I were in an in money option contract, it would get fucking demolished. They're so fucking high, and the fucking theta crush is gonna fucking destroy them. I'm telling you, man, focus on something that's cheap, focus on something that's low risk, focus on something that has big upside potential. Anybody can get good at anything. So in terms of trading, the foundation of trading is to have a system where you can be profitable with a low win rate. The best traders are the ones with win rates as low as 30%. So if you figure out how to be profitable with a very low win rate, 30%, 40%, 50%, very, very low in current times, right? If you figure out how to be profitable with that, from there, you just figure out how to increase your win rate. And that's just the icing on the fucking cake. Not that you need it, man. The percentage gains always outweigh the losses, man. Like I told you, if you make a trade, 1000% return, you can have 9 losses in a row and still be up 100%. People who trade in the money option contracts, people who buy shares, people who get in and out very fucking quickly, not trading for the money option contracts, they don't talk like this and they don't talk in percentiles. All they do is talk in fucking dollars, and that's just not going to work, especially if you have a fucking small account. And rich people, they prefer to hold their trades longer if they know how to fucking trade. They prefer to make massive percentage gains. They prefer to buy something that's cheap, that's low risk, where they can hold, sell deep in the money. And like I said, man, trading is really about finding a way to create a cutting edge system. And that's what options allow you to do. Since we are trading far out of the money option contracts, it's allowed us to create a system where we don't need a stop loss, man. It's so fucking stupid to have a stop loss on far out of the money option contracts. You know how easy it is to enter a trade on far out of the money option contracts and be down 30 to 50% within minutes? But that means it can come back to life a couple minutes later, right? And you could just sell in the fucking money, or you could just sell the rip quickly for like a 30, 50% gain. Why the fuck get stopped out? It doesn't make any fucking sense. We have the whole day for them to go in the fucking money. We're putting in our entire, position size as our max risk per trade. It's not high fucking risk. And then we protect the gains by sending the profit stops. It's like, dude, I'm trying to put you onto the game. I'm trying to wake you up. The market is about developing a cutting edge system. Far out of the money option contracts is extremely cutting edge. No stop losses. You have the entire day for the contracts to go in the fucking money. Extremely cheap, extremely low risk. You want to know the exciting part about trading? It's identifying the best setups at the best prices. And what does that mean? That means identifying a trading setup that is extremely cheap in price that can yield you the biggest percentage gains. That's what the best fucking setup is. You want to know what a shit fucking setup is? I'll tell you what a fucking shit setup is. Find a trader who's making a fuck ton of trades on the day and their small percentage gains. That is not a best fucking setup. The market is not created equally, man. You want to see what a best fucking setup is? SPY breaks above resistance, 585 to 590. It loses its gains in 30 minutes. How long did it take to gain those gains? Hours. Overreaction to the downside, break and retest, it can potentially spike 5 points very fucking quickly. If this can spike 5 points very fucking quickly, I'm going far out of the money. I'm getting in towards the lows. I'm making big fucking percentage gains. I have the whole fucking day for the contracts to go in the money. The fuck? That's the best fucking setup. This market is about identifying the best setups. And in terms of the best setups, it's the trades that are extremely cheap, extremely low risk, with big upside potential. That's massive fucking upside potential. Go back throughout the past 10 days. How many times did that setup come to you? Did you take advantage? Did you have the awareness? Did you have the third eye open, man? I'm trying to put you onto the game, man. If the market is about identifying the most lucrative, best fucking setups, you're going to be buying far the money option contracts all non-fucking stop, man. You're going to see, man. You're going to see, wow, this particular setup is rare. This can spike 5 fucking points in a quick period of time. This is very rare. That's the best fucking setup. Let's buy something that's cheap, low risk, that has the biggest percentage gains. We don't need a stop loss, and we can just hold the fucking trade all day to sell in the money. That's what the market is about. It's about identifying setups, and the best setups are the ones that are designed for 0-day options that are far out of the money. We know how to identify the best setups, the ones that are cheap, low risk, that can go in the money later on throughout the day. We know how to identify them, and they're extremely rare. Look at that. That's one setup right there. So with this, there's a couple trades. If you're following people who are making 50 fucking trades a day, I can assure you they're doing nothing special, and they're selling too fucking quickly. They have poor fucking habits, and they're not identifying the best fucking setup. If you trade 50 fucking times a day, out of those 50 trades, 3 of those trades are going to be the best fucking setups. So did you hold those 3 best fucking setups, or did you scalp like a fucking degenerate on the 3 best setups the same way you scalped on the 47 other fucking trades? I'm trying to put you onto the game, man. Some people, they want to do every fucking thing. They want to have every fucking system where they just make shitty little fucking scalps, and they also want to trade the best setups. That's where it gets more complex, more complicated. But us, we just prefer to trade the best fucking setups with the lowest fucking risk, the highest fucking reward, the biggest upside fucking potential. The ones that are literally designed to go far out of the money option contracts. It's like, dude, certain trades, if you're not going far out of the money option contracts and you're trading options, it genuinely makes no sense on what the fuck you're doing. And that's what we're focused on, just trading those, because they have the biggest upside potential. They have the highest chance for anyone to succeed. And that's what we specialize in, just trading those overall setups. Fuck the other setups. That's what I have to say about that. Fuck all those other fucking setups where you get in, you get out, fuck all that shit. That's going to complicate your trading. And, you know, if you're going to do that, are you going to be able to trade the best setups just as well? Or are you going to let that other fucking shit you're doing fuck with the best setups and get out too fucking soon? There's a reason why we know how to actually hold our fucking trades. Because if all we're doing is trading the best fucking setups, well, that means we're fucking holding. Because a best fucking setup is set up to fucking hold. So in this market, you need to wait for the best setups. You need to wait for the best fucking prices. You need to identify the fucking potential. And you need to focus on far out of the money option contracts, man. We're trying to put everyone, you know, not just ourselves, but everyone in a situation where this is the best thing they can possibly do for their overall accounts if they're trading with real money. So that's what we specialize in identifying the best setups possible and aligning that with the best asset class, far out of the money option contracts, selling them in the money, no stop losses needed, have the entire day to go in the fucking money, right? If a move is that explosive, there's no fucking way I don't want to go in the money. I just want to focus on something that's extremely cheap, put in less of my money. The less money you risk, right? The less money you put in, the less money you risk. That means, oh, you don't need a fucking stop loss anymore. That means, oh, you're risking less money. That means, oh, all my fucking percentage gains are going to outweigh their dollar gains, even if they're putting in more and selling fucking quickly. Fuck that. Identify the play. If the play says to hold, fucking hold the trade. Dissect it. If you're not dissecting trades and identifying the potential of the best setups, then what the fuck are you doing? If there's a trade that says to hold for 2 hours, or this can go up 5 fucking points, why the fuck are you selling so quickly? Is that what you're used to doing? Did you identify the fucking play? You have to reset after every trade and identify the potential of the trade. Dissect the trade. That's something that every trader has to learn how to do. Dissect the trade. You decide and optimize for on what you want to settle for. You want to settle for a bunch of shitty fucking scalps and a bunch of random fucking shitty trades? Or do you want to settle for the no-brainer setups that are easy fucking money that you're just so fucking excited to talk about because you know they fucking work. You know it's the best thing you could possibly do. Cheap, low risk, biggest percentage gains. That's what we specialize in, man. Finding the best setups possible with the best asset classes. If you're serious about making money, it's the first link down below. It's the first link down below within the description. You can print money with us all fucking day. All we do is trade the best fucking plays. That's it. If you're looking for shitty fucking scalps, if you're looking to get in and out for small fucking gains, this is the wrong group. If you're looking for big percentage gains with the cheapest, lowest barrier to entry, this is the right group. The one that's the best, the highest tier of fucking trading, the one that's mastered the best fucking asset class. If you're looking for the real fucking deal, it's the first link down below within the description. Just throughout the past week, like I said, I've seen many members in here make hundreds of dollars, make thousands of dollars. They've been fucking crushing it, man. So we got an amazing group. We got an amazing community. If you want to join us, it's the first link down below within the description. With that being said, tomorrow's going to be an easy day. We're going to absolutely crush it.